All right, here's one of my favorites. My background is retail banking. I did it for over 30 years. So now I want to talk a little bit about credit arrangements. What happens if I need to borrow money to get this business up and running and where I want it to be? Now, remember we spoke about our little stash over here that we should have, our 3, 6, or 12-month pile of money just waiting to be spent. Well, what if I don't have that? What if I need to borrow money to get this up and running? How am I going to do that? Where am I going to go? What's our first thought here? Where would you go if you had to borrow money? Mom. Well, Mom. Of course, Mom or Aunt Betsy. So Mom is really good. If Mom or a friend or a family member want to help you out, there's 2 ways they can do that. One is to lend you the money, and you can structure a promissory note any way you want to. You know, there's no payments due for the first year, maybe interest only starting in month 13, and in month 24 interest plus principal, whatever you want. Just have a written promissory note. The second way is if Mom or Aunt Betsy invests in the company and they become a shareholder in the company. Now, what's the difference? The difference is, if the business goes under and I became a shareholder, I lose my investment. And you have no obligation to pay them back. You may feel guilty, but you still have no obligation to pay them back. If they lent you the money, you have an obligation to pay them back. So you have to ask yourself the question, if I have $5,000 and I borrow $10,000 and 6 months down the road my business is closed, I've lost my original $5, and I still owe Mom or Aunt Betsy $10,000, how hard are you going to cry? I mean, to me, that's a cry factor, and that can be a very important factor. All right? So you can go to Mom, go to your family, they can invest, or they can lend you money. So that's not an option. Where else can you go? You said a bank. So you go to your bank. That's probably where most of us would start. The conventional bank. You sit down with the banker, you say, oh, I would like to take out a small business loan. I'm starting my own business. And the banker says, have a seat. We'd love to help you out. And they tell you the documentation that you need. So they'll tell you, oh, you need your last 2 years' personal tax returns. You need your last 2 years' business tax returns. And you're like, wait a second. I'm just starting. I don't have business tax returns. Well, unfortunately, that's what we require for small business loans. Well, what is the bank telling you? They don't do startups. Exactly. That's exactly right. Doesn't mean you're out of the ballpark altogether. It just means that you're going to have to come up with collateral here and go a different route. So now the bank likes your loan a little bit, but not a lot, not enough to give you the entire amount that you're looking for. So they may run this as what they call an SBA loan. Now the SBA, the Small Business Administration, in this case doesn't act as a lender. The SBA works as a guarantor. So it gives the bank a comfort level to lend you the money that you're looking for. So if you apply for a $30,000 loan, and maybe the SBA said, well, we'll guarantee $15,000 of that, that will induce the bank to give you the loan for $30,000. So that's a possibility. All right, so now the SBA doesn't like you, the bank doesn't like you, Mom doesn't like you, where else are you going to go? What's another option?
Kickstarter.
Crowdfunding, Kickstarter. Kickstarter is probably the best known of the crowdfunding places. Now, crowdfunding is something, for the life of me, will never understand why a complete stranger is going to send a check to somebody to help them start their business. I don't know why that works, but it can. Now, if you use a crowdfunding site, make sure that you understand the fine print there, because each crowdfunding site works a little bit differently. Some of them will allow you, you have to set a goal, and some of them will allow you to reach your goal and then get paid out. Some of them say if you don't reach your goal, you don't get anything. Now remember, the crowdfunding sites, they're not philanthropic. They're there to make money. So they're going to take a percentage of what you raise. Now, it's really predicated on the fact that you put up a short bio of what you want to do, why you want to raise this money. Then you send this out to your friends on Twitter, LinkedIn, Facebook, and hopefully they send it out to all their friends, and hopefully at the end of the day, you've got $50,000 raised, okay? Now, the SEC is also working on a plan now where as somebody who's contributed to a crowdfunding site then can start to be a shareholder of that company. I don't know much about it, but that's what they're working on, all right? The SEC, the Securities and Exchange Commission. All right, so we don't like crowdfunding, so what else can we do? Any thoughts? Grants. Well, I'm sorry, I'm opening up a for-profit business, and virtually there is no grant money for for-profit business, so don't count on it. If you were doing a not-for-profit, you'd have a much better shot. But it's also a lengthy process. Grants don't happen overnight. If you were an esoteric type of business, there may be a foundation or an organization that is willing to give grant money out. If you're looking to put in a retail type of facility in a town that's looking to revitalize, sometimes the contractor or the municipality itself has funds that they'll use to attract small businesses into the area. That happened in Haverstraw with Ginsburg and a few other towns. So grant money usually doesn't work, okay? I'm not saying it's not there, but don't count on it.
It's more like a piece rather than...
Well, it's not just that. It's like probably 0.001% of grant money goes to for-profits. What happens is a not-for-profit applies for the grant and then has to hire a for-profit to fulfill the obligations of that project that they're doing. What else? I'm sorry.
Microlenders?
Thank you. Microlenders, absolutely. Microlenders are not-for-profits. Their function is to lend money to small businesses that can't raise funds through a conventional bank. Now, the microlender is more flexible. They will require the same documentation. They will require a fairly decent credit score. They will require a business plan, which we'll speak about. But they meet with you. They sit down and actually talk to you. You make sure your business plan, your business idea is feasible. And if you can demonstrate the ability to repay the loan, chances are pretty good that you'll be approved. Now, most microlending programs are revolving loan funds. Therefore, they may not be able to advance you the total amount that you're asking for. So let's say I'm looking to raise $25,000. And they say, we don't have that in the bank, because if we give that to you, we can't lend it out to anybody else. But they may be able to advance you $5,000 a month for the next 5 months. And that may be exactly what you need. Maybe all you need is that cash flow. All right, any other way to borrow money?
Angel investors.
Angel investors. Venture capitalists. Now, my guess is that nobody in here would qualify for venture capital funds. Venture capital is the big dollars, the big guys. I had a client a few years ago, spent about 2 years putting together his own company, which was an alternative solar company. And he raised a few $1 million through venture capital money. That was very nice. What was the danger? The danger is the venture capital people didn't like the way he was running the business, so they fired him. So he's gone. So he doesn't lose his interest in the company, but he has no job, so that's a chance you take. Venture capital, angel investors. Angel investor could be an individual. It could be a small group of people. But they want to make a high rate of return in a short period of time. That's how they make their money. Remember, nobody here is philanthropic. Everybody wants to make a profit. And please, never lose sight of that. Okay? Once you do, you might as well close your doors.